I'm honored to be here. Want to thank the organizers for inviting me. I'm a professor at the Foss School of Business at the University of Washington in Seattle. Today I'm going to talk about internet finance, to share my thoughts with the audience, with the experts. So Professor Manchanda has mentioned about the Chinese numbers staggering. So let's start with some numbers. So also Duncan also mentioned about the yuebao. The literary Chinese, the English translation is a leftover treasure. It's essentially Alipay. As also mentioned earlier, Alipay it's a separate company of Alibaba now, together with Ali Microloan. It's part of the newly created Ant Financial. So yuebao, part of it's a money market fund of Ant Financial, had 574 billion yuan in assets by June this year, and roughly 100 million users. Compared to just 6 months ago, I think the assets kind of tripled. By the end of the December last year, the asset was big, but only 185 billion yuan. And it's very popular with young people in China. Caifutong, it's another money market fund with Tencent, has similar growth trajectory. So on the financing side, P2P and crowdfunding also very popular in China. And by the end of last year, there were over 350 P2P lending platforms, and the number was about 20 crowdfunding sites end of last year. But the number has gone to 80 crowdfunding sites by now. And some of them are experimenting with, just like the US, the equity-based crowdfunding. So some of the developments in China and the US in the crowdfunding area kind of parallel with each other. So Ali Microloan, as I said earlier, it's now part of the Ant Financial, provided over 160 billion yuan loan to over 65,000 small businesses. Most of them are Taobao sellers by the end of last year. And the default rate is extremely low. It's was less than 1% and has inched up a little bit this year, but it's still kind of around 1%. So today, when we talk about the internet finance, it's fair to say the Chinese banks, the internet, the technologies have also transformed these traditional banks. But today I'm going to mainly focus on the changes brought by the technology company, by the e-commerce companies. So I'm going to talk about the three related issues. What leads to this explosive growth of the internet commerce, internet finance, and does internet finance bring innovations? And what are the broader impacts and implications? To simply say that internet finance is popular in China, it's an understatement. But we also have to realize that the internet finance has built upon the previous success of the third-party payment platforms. In the US, we call it online payment, but in China, they call it third-party payment simply because it's intermediary between the buyer and the sellers. So at the start of the e-commerce more than a decade ago, because of the less acceptance of less usage of the credit card, so Chinese consumers had a hard time to pay for the online shopping. And as an escrow service, the third-party payment platforms, they served a very important role to enable the strangers to conduct the business transactions over this online environment. And by July this year, the People's Bank of China had issued a total of 269 licenses for these third-party payments. And of course, like Alibaba and the Tencent, they got the license in the first stage. So they total issued like the 5 times these licenses. So with a very specific this third-party payment service, it's called Express Pay. Consumers, so it's a very specific service. Consumers have to sign up. So with this Express Pay, consumers can very easily transfer money from their banks to the Alipay and other third-party payment platforms. So this service essentially ties a consumer's bank account with the Alipay account, and so consumers. That's how consumers start to send the money to Yuebao, the Alipay's money market fund. And the money market fund is managed by the Tianhong Money Market Fund. And the reason they can offer a much higher return to the consumers is because there's a huge gap between the regulated deposit rate in China and also the prime rate. And the money market fund can negotiate a much higher deposit rate from the banks. They also invest in other short-term investments like commercial papers. And according to the data, they passed most of their profit. There are some debates about it, but according to the company's data, the fees is very low, like 0.3%. So they passed most of their gains to the customers. And it offers a lot of convenience to the consumers. Consumers, there's no minimum requirement as compared to the regular money market fund, and they can have instant withdrawal. And but many people, as Duncan mentioned earlier, it's not received equally, and some people call it like the vampire, the sucks blood of the state banks, and it's raised the cost of the capital. And since then, the state-owned banks have also taken measures to limit the amount of the money a consumer can transfer from his or her bank account to the market fund on a daily basis. So the question is, besides the regulatory arbitrage, are there true innovations of this money market fund? And the question, with the banks starting to offer other wealth management programs, where the growth slow down, so in my opinion, this money market fund is just one component of the overall strategy of Alipay and other companies to try to dominate in this online payment world. So essentially, Alipay and also the competing Tencent Pay, they offer mobile applications. There's a lot of talk about the mobile, So essentially, they have these mobile apps. Consumers on their fingertips, they can, of course, they can shop online. They can pay bills. Utility bills, they can pay phone bills, just like us, we do here, with Uber. They can also order taxis. They can transfer money very easily from bank to the money market funds and vice versa. And they can also transfer money in the P2P kind of a P2P sense. They can also transfer money between consumers themselves. And what is the most impressive, I feel, is this is not just an online payment system. It has moved to the offline with a temporary halt by the People's Bank of China in March this year, and this so-called QR pay and barcode pay is very live today in China. So in March this year, PBOC has issued some order to stop this QR, but recently, they have been very silent about this. But this mobile pay has gained ground. More and more merchants have signed with these payment platforms. And it's a competing technology, if you are aware, if you are starting to use Apple Pay. Apple Pay uses the technology of NFC, near field communication. But this QR Pay, I think PayPal is using the QR Pay. And so consumers can very easily, so in the first picture, they can just has a scanning option. They can scan the QR code, the merchant's QR code. They can scan a QR code at the vending machine and purchase the products. Another way is they can also have their dynamically generated QR code. So it's more secure. So if you open up the application, actually you can see the barcode changes like in a couple of seconds. So it's a dynamically generated code. So you can let the merchant to scan the code and also get paid. So this is it's gaining ground in China right now. And next, I'm also going to talk about, as Duncan mentioned, more about this, about the lending side. The Ali Microloan. They started their first company because they have to register locally. The first company was registered in Hangzhou, where the headquarters of Alibaba is. In June 2010, the next year they registered another company in Chongqing. It's more interior China. And so the maximum allowed the loan is a million yuan, roughly 162,000 US dollars. And the interest rate is between 12 to 18%. And the average loan period is about like 4 months. So different from other lending models, like asset-based traditional like collateral lending models, which China's Ming Fan Bank plays a very big part of it. Still, if you talk about the total loan amount, Ming Fan Bank leads in lending to the small and medium-sized enterprises. But if we look at the loans of Alibaba, the loan amount is more micro, and the time is shorter, and but more importantly, they have a very different model. So according to Jack Ma, it's no collaterals, no secret connection. What we need is your credit. And so they heavily rely on the past transaction data, rely on the reputation data. So as other speakers have talked about, they rely on the big data. So as a matter of fact, according to the company, is they based their predictive modeling, predictive analysis based on this big data of consumer behavior in the before to predict their default chances in the future. So that's why they can get a much lower default rate. And I think this internet finance is a very healthy development in China, and has significant impacts. First, I think to the millions of consumers, especially to the consumers who have a lower income and who live in underdeveloped areas in China, traditionally have been ignored by the traditional banking systems. Now they have an opportunity to have a much wider participation, have a much easier access to these financial services. I think drastically affect their livelihood. And also increase the competition is forcing the banks to compete with these internet financing firms and to force them to innovate and reduce their costs. And also, it's speed up, probably will also speed up the interest rate liberalization from the central banks. But there are also some new risks. For example, it's very convenient to the consumers. The consumer can withdraw the money instantly from money market funds. But these money market funds, they usually invest in the assets that have a longer maturity. So there's a mismatch there. But also, according to the company, they use this big data. They claim they have a very high precision in predicting the cash requirements in the next day, in the next week. So my final thoughts. So I think behind this internet finance, it's really the dynamic tech sector. It's the dynamic e-commerce sector who are leading these changes in China. And frankly, the central bank, the regulatory authority has to work on a very fine line of not killing off these innovations. At the same time, they also have to protect the consumer rights. But according, based on my limited interactions with them, I feel the central bank is they're adopting a very pragmatic approach in doing the regulation. And finally, as Professor Machanda has mentioned, this payment network, this e-commerce, these are platforms, and they have very strong network externalities. So with more and more merchants, they have to sign up. Even with the banks introducing the other wealth management products, I feel the consumers will still be quite loyal to these money market funds. Because with a lot of merchants, these consumers feel it's very convenient because they can easily pay bills. And also there's a network effects between the consumers to consumers. And it's very convenient for them to transfer money between each other. So these companies competing with the banks, they have built up very serious competitive advantages. And of course, over time, I think they are going to have more data, and their models will get even better. I think. This is a very different model. It's very difficult for the traditional banks to replicate, to compete. So basically, that's I think what I want to talk about this area. Thank you very much.